Are you tired of looking at homes with a 7% interest rate or a 6% interest rate? Or how about this, even the builders that's buying down your interest rate to a 5 or a 4.5 fixed rate? What if I could tell you you could find a home with a 2.75 interest rate that you could easily assume? Yes, this is going to save you thousands of dollars on your monthly home payment, and it's not that hard to do. Today, I'm going to teach you about assumable loans. Any government-backed loan is assumable. FHA and VA are your most common ones, but you also have USDA as well. My name is Anthony Sharp. I'm a local realtor here in San Antonio, Texas, and I'm going to educate you on the pros and cons of the assumable home loans. This is a huge marketing piece for sellers. Sellers, right now, you have a huge potential to market to a ton of buyers who are needing low monthly cost payments. And let me tell you this, lenders are not gonna like what I'm about to teach you simply because it kind of takes away money for them to do a whole different home loan for you to purchase your next property. So when you assume a home loan, one of the main benefits here is that you're saving so much money on the closing cost. So the assumable loan department with a servicing lender is gonna charge usually about 0.5%, upwards of maybe 1%. That's on the very high end, or I've seen flat fees of $500 or $1,000 for you to pay them so you can assume a low interest rate loan. That's nothing compared to the $10,000, $15,000 it's going to cost you to buy a brand new home or a pre-owned home, whatever the case is. So there's a huge advantage for your closing costs to be very nominal. Another saving piece is going to be your appraisal. Appraisers right now are charging anywhere between $500 to $1,000, upwards of $1,500 if it's a rural area for them to go out and appraise the home. Well, with assumable loans, you don't have to pay an appraiser because the only loan that you're taking over has already been appraised. So the equity piece does have to get paid separate. So we talked about closing costs being reduced, no appraiser fees. Is there anything else that's great about this? Yes, there is. You're going to be locking in a low interest rate, usually around 2.75, 3.5, 3.25, whatever the case is. You're going to be taking over whatever loan, whatever fixed interest rate that seller has been assigned to, that they've already paid closing costs to. You're going to take over those monthly payments. So let's talk about the cons. Why would I recommend someone not assume a home loan? Well, for starters, usually there's something what's called an equity gap. So let's say I list the home at $300,000 and the principal balance is $250,000 that you would assume. There's $50,000 gap that you're gonna have to figure out how to pay for. Whether you pay that cash or what's a new way of doing it, the VA just announced several days back that they're allowing you to finance the other piece. As you can see here, VA assumable loans, second lien is no longer need to be assumable. So what they're saying in this article that's dated August 11, 2024, you can now finance, the lender can help you finance that equity gap. So before, what was happening is the lenders were not allowing you to have a second lien on the home. So if you were to have, the primary lien is the principal loan that you've loaned on. That's the primary lien. A second lien is something that you bring into that home purchase as a loan to cover any kind of gap or coverage of a different financing need. Most lenders were saying no, there's no second liens allowed. Well, what we're doing now is VA loans are going to soon allow you to finance the equity gap. This is huge, groundbreaking news because most buyers don't have $100,000 to cover in cash for the equity gap. Unfortunately, they just didn't have it. So for most of my buyers back in the day, this just was simply not an offer. But now with home prices dwindling slightly and the ability to be able to finance that equity gap, I think we're going to see a huge potential for sellers and buyers to grab a hold of those low 2.75 interest rates here soon. So another item that I like to address and make expectations real is that the assumption process can take time. Unfortunately, lenders don't get paid on the assumptions. They're not getting paid much of anything. So they put this on the back burner. So if you're trying to get anything rushed with an assumption to get it closed within a month, I'd tell you that you're likely to have to wait upwards of 2 to 3, sometimes 5 months just to get an assumption deal closed. Now, we'll still go to title company like a traditional sale. And title is going to hold, the earnest deposit. They're going to order the HOA docs. They're going to do a lot of things like we would a standard transaction with a resale. However, the one thing different with the assumptions is you're not going to have to pay a title policy. You're going to pay what's called an owner's policy, which is going to be significantly lower than the full title policy itself. And we're looking at maybe $1,000, $1,500, depending on the purchase price of what the buyer is going to cough up for the title owner's policy. And lastly, I'd like to tell everyone, especially my sellers, there's more advantages for the buyers to assume the home loan than there is the seller. Yes, the seller is going to be able to market to a lot more buyer pool and probably get their home sold for a lot more. However, one thing you need to be wary of is there's entitlements tied into that property. You as a VA seller or as a buyer, when you went to buy that home, you had entitlements that you put into the loan. And those entitlements don't go back to you unless the buyer is a VA home loan buyer that has eligible entitlements, and they will be using this as their primary home. So if it's an investment and someone's just trying to do what's called a subject to, your entitlements get stuck into that home until it gets paid off. Oh, and guess what? If there is a bankruptcy, your entitlements are gone. So I tell my sellers, make sure we know that the buyer coming into this purchase has VA entitlements left, so that way they can give them to you and you can relinquish your entitlements for your next home purchase. This is a very, very important step that we have to make sure the buyer's entitlements are clear and they're going to be using this home as their primary residence. Sellers, if you're trying to market your home as an assumption, one way to do it is get with your realtor and have them put in the public remarks at the very first line, this loan is assumable at X%. Whatever the percentage, make sure it's in the public remarks so that way buyers see that the first thing they can do. Unfortunately, the MLS does not have a drop down or any other way for you to mark that it's an assumable home loan. So we have to make it a public remark so that way buyers know what they're getting into and that there's a possibility that they can go in and assume your home loan. So there you have it. This is my rundown of what assumable home loans are, the pros, the cons, the benefits, and the pitfalls to watch out for. If you have any more questions about assumable home loans, or if you want to get a pocket listing or some listings that might be coming up here soon that are not advertised yet, that are assumptions, let me know. I've got some sellers that have hit me up saying, hey, look, I've got an assumable 2.5 interest rate in near Randolph, and I've got one coming up near Lackland that the sellers are hoping to get rid of before the fourth quarter. So if you're in the market to look for an assumable loan, send me a message. My information is going to be down below. I look forward to talking to you guys here soon. Take care.